I don't know how much upside we'll get in 2024. Depends on what the regulations are, obviously, and stuff like that. But I do think there's going to be a pivot in Bitcoin specifically where investors will start viewing it as a safe haven versus a risk asset. And I think that finally comes in. My guess is when stocks become very unattractive because we get in a long-term bear market, if you will, an economic recession that the Fed can't print us out of initially, then I think people start saying, okay, well, stocks keep making a little less money, so earnings are going down, therefore valuations have to keep coming down. Where do we go? And if you can get regulation and it makes sense, and if Bitcoin is spared a lot of that regulation, then I do think once there's clarity in crypto, then you start to see money flowing into Bitcoin as a safe haven, and that should happen in 2024. Even though I think it's going to 12 to 13, maybe 9, it's not like I'm waiting with my cash to buy at 9, right? I'm smart enough to know that I'm not smart, meaning that I don't know the exact low. And so what that means is that when it was in the 17 range, I picked up a 1/6 position, meaning that it was 1/6 of the bag that I want to accumulate on Bitcoin. And basically what I said to myself is every 2 to 3,000 down, I'm going to just add another 1/6 until I have a full 6/6 position, right? I do expect potentially to go as low as 9, but I don't want to be left with nothing in the Bitcoin bag if it doesn't get there. And so that's really where dollar cost averaging. I mean, once you get down in the sub 20,000 level, you're now really close to the lows. I mean, even if it goes to 9 from 15 and change, which was the low, that's in the scheme of being at 69,000 all the way down to here. It's not that big of a move anymore.
Right.
You kind of have to start to say, what's my long-term thesis on Bitcoin? Is it bullish? And if so, then you just basically have a game plan as it comes down and you execute that game plan. So when we think about what we've seen recently, we've seen some of these altcoins rip up 100%. We've seen Bitcoin take off, people getting so bullish so quickly. And what's going on here is as we've gotten this January bounce in the market, a lot of retail investors have gotten very bullish, thinking it's going to be a repeat of 2021. The problem is we have different things, right? So in 2021, interest rates were 0, the Fed was printing money, and the government was sending checks out to most Americans. Now we have 2023, interest rates are 5%, which again, remember, sucks money out of the system. There's no quantitative easing, and the government obviously is not sending checks out. So I think investors have to be very, very careful here. I've seen many bear market rallies. This has all the earmarks of another bear market rally. And that's the way bear markets are. You have these reflex rallies that are really intense and unbelievable, and they really pull at your emotions to make you want to go bullish. And you just see things keep going up and up and up. But again, you just have to step back and look at the bigger picture. And if you go to the weekly charts, the monthly charts, this does have the earmarks of basically run-of-your-mill past bear market rallies. So here we have the chart of the S&P 500, right? And again, what I think investors are really queuing off of, there's a couple things that are bullish in the near term here. So number one would be basically the fact that if you look at this low, we've made a higher low and also a high and a higher high. So in terms of short-term bullishness, there's no doubt about that. In addition, there was a trend line that was broken here where we also went above it, which people are saying, okay, this is a big breakout. This is the start of a new bull market. The problem is I've seen many, many markets during bear cycles do this exact thing. And we've seen a market that comes back to the lows and even makes new lows. And so again, that's the problem I'm facing here, is that to me, until I see some of the other factors align, to me, this is not a bullish breakout of a bull market. Well, if we're going to head back down and we're going to make a new low, where is your likely target going to be? And that would be this trend line right here, which was your pre-COVID high. So to me, and this probably plays out over the next 2 months, I would say. And I think, again, we're maybe even starting to see that weakness creep back in. We've seen all of these kind of former meme stocks run very similar to the top in 2021. I think this is an interim top inside of this bear market, and probably within 2 to 3 months, we're down to this trend line at around 3,400 on the S&P.
And, would that be that rollover? Do you think that's the ultimate bottom and the base that we're going to find for this cycle, and then slowly start working our way up? And then maybe that dovetails with the Fed now cutting rates, but pausing on rate hikes later this year.
Yeah, so that's a great question, and I'm kind of stuck between a rock and a hard place here because I think that you will get a significant bounce off of that, but I also think that we have to have a reversion to the mean, right? So again, we've had this market where we've been in this bull market that you could argue is artificially inflated because of Fed printing of money, and they finally stopped printing. So we're starting to revert back to the mean. And if I show my chart again on the S&P 500, we have this longer green trend line that actually goes all the way back to 2009. And you can see it basically hits every low. The only time we pierced it was in the panic of COVID because we were literally, I mean, there were people there that thinking the world was going to end. So it was massive panic. But that would be kind of my ultimate target on the downside for this cycle, at least in this period over the next 12 months. So I do think after we bounce off this 3,400, you probably have one more flush down to about 3,000. That just, I mean, if the Fed is really going hard nose on inflation, then it makes a lot of sense that we have to come back to where the trend line was that is kind of the longer term trend of the market. Even though that market did have the QE in it, we've still got to come at least touch that trend at 3,000 on the S&P.
Or what are the charts telling you on when it comes to XRP token?
Yeah, so charts, it's actually a really interesting chart because what we have here is this what's called a wedge pattern. And wedge patterns basically are drawn when you connect the high recent lows. And when you have a wedge pattern, it's basically a triangle coming to a head. And it essentially tells you that price is getting tighter and tighter. It's almost like a spring being wound up. Now, the problem is we don't know which way it's going to go. Is it going to break out edge, or is it break to the downside? And that's really where the issue comes in, is where we know that this chart is going to come to a head, right? These two lines are going to meet, let's say, a month from now or whenever. And so it tells us is probably you're right. There will be a judge's decision, and that's going to force price to either have a huge move up or a huge move down. Again, based on this, I have no idea which direction that's going to go. The only thing I can advise people is like anytime you would never want to put your whole cash in anything that it's reliant on one judge's decision, right? My thing is I don't love anything I invest in. All right. And again, this is my policy is like anytime I invest in something, I'm using it to make my family and I money, and I will dump it the second it changes the chart on me.